Hey guys, welcome to another webinar, and I hope you had a wonderful and beautiful weekend. Today we're gonna do the same thing we do every week. I've done a pre-scan of the market already in regards to the FX pairs. Now I'm moving or gravitating more towards the indices because they're more stable than the FX. So if you're looking for non-adventurous investments, you might want to consider going into indices. Now, everything I say here, these are my own personal opinion. You want to read the disclaimer below this video. I'm not literally stating you should take any of this. It's just primarily for educational purposes only. So these are my own personal outlook to the market, and this is how I see the market, basically. So moving forward from the assets I've looked at today, I mean, you can see them at the top here, but for the guys I've never been here before, welcome, and get right to it. So there's something called COT report, the Commitment of Traders report, which shows the commercials and non-commercials. It looks like this basically. So commercials are industry leaders, and non-commercials are also some industry leaders and some traders like you and I, right? Now we pay attention to these guys because these guys move volume, and these guys are the people looking at these guys, what they're doing. They're trying to, so these guys, non-commercial, are trying to predict what these guys are doing in the market or where these guys are going to move the market, right? So that's why we follow these guys and we don't follow the people that are trying to predict, you know, them ones that, you have to go through a channel to get to a channel or middleman. These guys are middleman. It's like having direct access to God, for example, and you decide to go to a middleman. You can connect directly to God anywhere you are. That kind of vibe. So moving forward, what we do is we look at these guys if they're going long or short. Now, long means they're going up, short means they're going down. So for Japanese yen, for example, we see that they're going short. So we're going to write here COT, JPY, short. All right. Next thing we're going to look at is called seasonality. And then after that, we have something called probability. Right. Now, COT report is telling us what the commercials are doing. These guys are moving the market, so we tend to follow them. Now, just because they're going in this direction doesn't mean, it's going to happen in that direction, because you can look at the overall position, they are long compared to short. So anything can still happen. Some of this position might trigger. Some of this position might be pulled out. So things like that you have to consider, or more, they might add more to the positions. Things like that you have to consider. And based on what's happening, amount of money that's in the market, that will determine how the market moves, right? If it's going to be fluid or not fluid. So the first thing we look at is JPY. We've seen that. And then the next one I want to look at is Euro. We got that also on short. I'm just looking at them straight on. So when I'm looking at the seasonality, it's easier. I want to look into indices as well. Indices is more stable, guys. So you might want something that gives you more stability. Don't go look for adventure. This is adventure. Pounds, short. And next one, NZD short. Now, this isn't a big move position. It's just a 550. But if you look at the overall volume, I think that's about, how many percent would that be? 10. Oh, wow. So that's just about 2%. So 2.5%, 2.7% or something like that. 2.775%, I think. So yeah, I'm just doing calculations in my head. It might be wrong. I don't know. But yeah, that's quite small, but it's still doable. So we're just gonna have it down as short. If it gets very small, I just put it out there as iffy. It's not really a trade you want to look into like that. Because it becomes unstable when it's too small. Very small volume. Done that one already. So next thing we look at is we look at seasonality, right? Now, if you guys don't have this tool and you want to know how to get this tool, you can go to the website business.demempire.co.uk. It's in the description actually of this video, so check the description of the video. It's literally in there for you. So let's look at. So we look at JPY first, right? So this is what the seasonality looks like, right? Wait for that to load. JPY, Euro, GP, okay. So this is what the seasonality looks like. It has the 44 years, the 15 years, and the 5 years average of the market from January all the way to December. And you can isolate it, one-on-one. If you want to look at the 5 years, you can isolate that. 15 years, you can isolate that. 44, you can isolate that. And this would show you what happens over and over again. You want to notice the patterns, right? What's the trait of this market? What's the patterns of this market? So what you do is you identify where all three are lines together, and that's when you take the trade, right? In combination with your CO2 report. Now we know that JPY, right? What's going good? Short, right? We're looking at it for short, and we're on the 19th today. So from JPY seasonality, you can see it's meant to go short from the 6th, but we're on the 19th. So if we go, I'm just going to zoom in. So we're right here, right? So what we can see is by the 22nd, it does look like we'll start going, no, 21st. Everything looks more aligned at 21st because if we look at 20th, you can see the blue line behind is going up a little bit. So what you tend to want to do is want to look at 21st, right? And it's saying it's going to go short from 21st. So we're going to put that in our seasonality. We say JPY going short from 21st. And that's going to end when? Most likely somewhere around, let's just say somewhere around here on the 31st, but also it ends somewhere around here, 28, right? But let's just say 31st for example purposes. Now, keep in mind, everything I say here is based on your own perception. This is my own personal outlook on the market. It has nothing to do with what you want to do or not. Right. So we go 28 for medium. So I tend to have my risk ratio for trades. So when I write medium, it's not stake, It's like medium risk or high risk. It's not medium, rare or rare. That stuff. Yeah, so yeah. So that looks about good. Now, not because we know this, we're gonna jump on the market on the 28th. And be like, oh yeah, because we know seasonality is telling us short, COT is telling us short, we're just gonna hop in the market, Let's make some money out of it. No, mate. It doesn't work that way. First thing you should ask yourself is this is just JPY. This isn't Forex, right? It's just a future asset. So you need to get the Forex side of things, which then you come to probability. Now, probability looks like this. Now it looks familiar to you, CHF, JPY, and all that stuff. Yeah, this is the Forex aspect. So what we tend to look at is all JPY assets. So I tend to do that search. JPY. So anything, should highlight anything JPY for me. JPY. Yeah, it's not finding it. What's up? Oh man, don't want to begin. It contains JPY. Yeah, there we go. So go Euro JPY. So I'm opening all the JPY assets on the majors and the minors that I can find, not exotics, just majors and minors. And what I want to do is 19th of May. So probability looks like this. It has all the percentage of market in a specific date. As you can see, 2nd of January, you had a 38% chance if you're going up and 62% chance if you're going down. So it's over 100. So sell is telling you have a 62% chance of winning if you go on this day and all that. Now, this actually forecasts the future. This goes into the future. You can see this is May, but we have it all the way till December this year. So you have a 365 days probability tool. And as I keep saying, disclaimer, this is my own personal outlook at the market. It has nothing to do with, the way you decide to invest your money. Now, this right here shows you what the chances are. And if we look at the date 19th, right, we'll go all the way across. Keep in mind, your seasonality is good. Your COT is good. If your probability doesn't align, you don't want that trade. So that trade is bust. So what we're expecting is JPY to go short. Now, if we have JPY going short, that means CHF JPY automatically should go long, right? So CHF JPY, 63% chance on Tuesday, on Monday. and then 50-50, and then 53-72. Now, this is a very risky trade. You understand? I normally like it to go over 50%. Even if it's 51%, it gives me a little bit more peace of mind than when it's 50-50. But for guys that like to be extra adventurous, you can still invest in this. Going on Monday, come out on Friday, or when was the day we meant to come out again? 28th. Yeah, so it'll be Friday. No, not Friday. Next week. Yeah. Yeah, next week, Monday, you come out. So very adventurous people. Probability, Joe's gonna say CHF, JPY, Monday till 27. Long. So you go back, right? And that's this one. I'm just gonna call it adventures, basically. I hope you guys getting the drift of where this is going now. The more I'm showing you this, but if you don't get the drift, don't worry, get it. So same thing applies to Euro JPY. This one seems a little bit more stable. You know, long, then short. Then you have that 228. JPY, Euro JPY is good. Monday till 28. Right. So those are some of the assets on the probability section. I mean, you can look at CAD, JPY, and all of that as well. You know, it's right there. You know, I mean, you get the gist anyway. So, but it's right there as well. This actually looks more stable. No, it actually looks the same as the other one. But the same thing, GBP, JPY. Now, there's other assets that might be in alignment. For example, maybe the GBP or anything, but I'm not looking into that. Let's just go straight into indices. So next thing I want to look at is indices, right? Where is it? I'm just gonna close all of this. So if you need the tool, or if you want to do more analysis on JPY, you can go to the website. Links in the description. Go into the website and you know, you can get a membership and then look into that. So let's look at indices. Now this looks crazy if you're looking at it. Like, hell no, this is just the COT report that we just looked at in its raw format. There's no difference. It's just in raw format. That's all. If you want to see it in the normal FX format, we can do this, for example, and you can do that, and you can see it in this format instead. Yeah, so the same thing I want to look at S&P 500. You can see it in this format. So if you're looking at it, S&P 500, you go massive 41,000 position going long, and then 18,000 position going short. Well, you can see that for 1.4 million, literally 1.481845. You know, total position going long, and then total position going short. So you can look at that. We can look at NASDAQ, for example. You know, both of them are going long, so we don't touch them. We're looking for one going long, one going short. It has to be clear. Dow Jones looks good. Now this is my challenge with this, right? Okay, yeah, Dow Jones looks good. Okay, let me just look at that again. NASDAQ, all right, and Dow Jones. Dow Jones looks good. So what we're gonna do is we're gonna put Dow Jones, DJI, short. Right, well, DJI going short. So DJI just means Dow Jones Industrial or something like that. Which other one should we look at? I don't think we have Russell. UK 100. Let me see if UK 100 is here on this specific sheet. Yeah, UK 100 isn't here. But UK 100 might be. There is a. finances. Some of you have never been here before, I know. I'm trying to just look for UK 100 if I can find UK 100 on this list. Okay, we can check Nikkei as well for the guys in Japan. Let's see what Nikkei is saying. Yeah, it looks more different than the one we're used to. Yeah, but what you want to look at here is dealers and intermediaries. You can see they said dealers and intermediaries, right? They didn't want dealing the entire thing for you guys. All the other ones are the ones picking it up. So seeing that, seeing that. Can't find UK. These are UK 10. These are just bonds, but I'm trying to look for. Oh yeah, for guys I don't know, there's actually you can trade oats, rice, rough rice, corn, all that. These guys are more stable because you can take it with the season and yeah, they're practically stable assets. If you want to make money every year, just go trade these guys, man. I mean, take everything I say here with the notion or the idea is for educational purposes only, right? Don't go say I told you to trade this and or invest in this and you lost money and then I'm not liable for that. So read the description. So, but these guys are more stable. These guys are not that adventurous. This is adventure. This right here, adventure. You understand? But this right here that we do in regards to the FX, those are major adventures, right? You have to keep that in mind. That's very major adventures that we do right here. But if you want not much adventures, just go to the indices. Not much adventures going on there. Just put your money in there and make sure you pay attention. So I can't find the UK 100, but it is what it is. Next thing we'll do is we'll check the seasonality for the indices. So guys that don't know, seasonality for indices is now on the site. We had DGI, looking at DGI, right? So what was DGI? I just want to say it again. What is it? Um, what is it? I think we're saying short, isn't it? Yeah, short. Yeah. So DGI is short from the 19th. Let's see. 10 as before. I'm just gonna zoom in. Also from the 20th, you can see actually there's a slip. One, two. I don't like when there's just 2 day slip. On the 5 years, you can also slip for 2 days and that's it. I don't want that. I want it to slip for like 2 weeks or something like that. Maybe something like that. Well, this isn't sufficient for me to say I want to jump into this. So for that reason, I wouldn't touch this at all. And this is 70-year average, by the way. It's massive. This is a massive amount of data. So yeah. So indices ain't looking that much. I couldn't find the UK. It's there somewhere, but you guys will have to go find it. The UK seasonality, UK 100 seasonality. Let's even see what it's looking like. We're right here. Yeah, it's not looking good. Right here will be probably okay. Right here will be nice. Right here will be very nice. And these moves actually do occur a lot. So yeah, that's all I have for you guys in this session. So I'll catch you in the next one and invest safe, stay dangerous. Peace out, guys. God bless you all, man. All right.